Welcome back to Mostly Growth, the number one podcast in product monetization. And guys, I talked about this a little bit, but I was recently on the coast of Croatia for a SaaS conference, a conference called SaaS. And, I don't think I killed this conference, so that's positive.
Nice. Wow, you're only 1 for 2 in murdering SaaS conferences this year.
Yeah, it's still alive and well. It was a great event, but I was on the coast of Croatia. Like I took a great selfie that I could post to Instagram, but at the same time, a bunch of things were blowing up in my business. And that dichotomy was wild. It's like you can be in the most amazing place, but like feel like you're failing at all times.
I saw that post. I think I commented on it. You were looking happy. You were looking healthy. It looked like you were in the sunblock that we talked about too. So you weren't going to burn?
I'm always wearing sunscreen, but that was, I think, just before I got chewed out by my accountant for categorizing all my transactions the wrong way.
We should just have an episode called Kyle Hates QuickBooks, but CJ loves it.
I'm so bad at it. I think that I need to do a QuickBooks tutorial, but she was literally like, so there's a debit and a credit. And I was like, oh my gosh, this is accounting 101. I almost failed that class.
Okay, but like what was causing you this existential angst? Like you were at this conference. Did you do well at the conference? Was it the stuff in the background or just the conference itself?
Oh yeah, the event went fine. The talk I was giving was pretty well received. So that was great. But it was more that like when you run your own business, there's just so many things that fall to you that like no one's taught you before. You just like you're figuring it out for the first time. And I just had a bunch of those like losses kind of pile up over time. And I felt like we talk a lot about the wins, and it's like that's what it's great to celebrate the wins. But I also think it's useful for other people that are, whether they're thinking about being a solopreneur, thinking about starting their own business, or they just are operate at any sort of company and they want to get to a leadership level. I think it's like useful to peel or like pull back the curtain to show people like what is likely to go wrong and, what does it actually feel like on a day-to-day basis to be an entrepreneur?
I think this is incredibly useful for people starting their own businesses, people getting involved in a small business that they're either taking over from like their parents or buying one, or from people who are just trying to get into leadership positions, like you said, because you have to develop this specific list of skills that are outside of like your core competency. Let's say you came up as like a product person. You need to now have some semblance of P&L fluency in order to get to the next level. So I'm glad we're talking about this because as a small business owner, I've both never felt as smart and as dumb as I feel on a daily basis.
Oh yeah, it's a constant.
From Mostly Media, it's Mostly Growth. Go-to-market strategist Kyle Poyer and CFO CJ Gustafson break down how modern companies make money, covering pricing, monetization, and benchmarks in ways that make you better at your job. Tactics and playbooks for finance, product, and sales operators looking to be the CEO of their role. This is Mostly Growth.
I'll start off with the first one. So I've gone down this solopreneur route since last September. And I am now on business entity number 3, but I did get an official IRS notification that I am. They got my registration as an S corp, so I'm now an S corp. But yeah, I was a sole proprietor initially, which means you just use your social security number as your business entity. Realize that's probably not a good thing to have like everyone know my social security number. There's also like no separation between you as a person and the business. And so when you're doing things like advertising, probably not the best idea. So I went sole proprietor, then LLC, and then LLC to S Corp. And I feel like with each step, there was the promise of like, this is going to be better for me. But there was also like a lot more paperwork and a lot more hoops to jump through than I kind of realized when I agreed to do it.
So I just got mine in the mail too. And there is nothing more terrifying in the world than seeing this logo for the IRS come in the mail. Because I instantly say, uh-oh, I owe the government money. Because it's very rare that they tell you something positive when it shows up.
Oh yeah, I'm registered in Delaware. Well, then I had to re-register in Massachusetts, so that's a whole nother thing. But when I registered in Delaware, I set up like a entity that can check mail, basically collect mail for me. So they take photos of all the mail and email it to me. I got that email that was like, you have a letter from the IRS.
Horrible. Ruins any day. And you can't not look at it. Like, you can't be like, I'm just going to go about the rest of my day without, I'll leave that till later. Like, you got to open it.
Exactly. But it was a positive email. The email was that they got my registration. But so I'm hoping this one sticks, but some things to just like share for folks around this process. So as a sole proprietor, that's really easy to do. You actually like don't need to really do anything.
This is not tax advice, by the way. This is for entertainment purposes
not
only.
Tax advice, but like it's the fastest way to start a business. And if you're doing things like, hey, I've got one advising client for someone I already know, it's a pretty common thing to be like, all right, I'll just kind of go the sole proprietor route. But there's no separation between yourself and the business. You can't do things like open a business bank account. Like there's real challenges if you want to have a serious business. You got to have, some sort of entity usually. So that's where I went the LLC route. And I had sold ad inventory and then needed to send an invoice. And that's actually what got me to be like, let me go on Stripe Atlas and spin up an LLC. That seemed to be the fastest route to do it. Plus, when you sign up for Stripe Atlas, you can actually open a business account pretty immediately, even before you have an EIN or an employer ID number from the IRS. So like you can kind of be legit like instantly with Stripe, but they default you to Delaware. But if you're actually running your business in Massachusetts, like I am, you then need to double register and pay double taxes. But then I think we both went S Corp. So like 3 months later, I then was getting feedback that you should just move to S Corp. But you moved to S Corp too. What was your story there?
Also, just to take a step back. So like friend of the pod, we'll call him intern Charlie. He was a BC student and he would help me with just like random stuff from time to time. So he helped me with all the formatting when I moved from Substack to beehiiv, and I was paying him X dollars per post. And he's like, oh, do I have to set up a company now in order to get paid? I'm like, no, dude, like you can just invoice me as an individual. And of course, like it does have your social security attached to it. But like if you're only doing it with one company or one person you trust, it's fine. It gets a little sketchy when like I went through a year where it had invoiced 20 companies, I think. 20 different companies for like events, podcasts, newsletters, and it had my social security on all of them. I was like, okay, this doesn't feel, this doesn't feel great anymore. Maybe I should have an LLC as well for.
And they're all like PDFs that are just floating around in people's inboxes.
Horrible. And like some random person from marketing's email too, like not even the finance department sometimes. So the LLC also protects you from like people coming after you personally. So it creates a layer in between you and the business, and you can write off a lot of costs. But an S Corp can be better after a certain amount of income that you're getting past. So anecdotally, I've heard after called $150,000, you should start to consider an S Corp so you can start to pay yourself in distributions that look better on paper and have a better tax rate.
Yeah, and so I think that's the nuance is that when you're an LLC or sole proprietor, any dollar in revenue you're getting essentially is taxed as if it's personal income. But when you move to an S Corp, there's like a business entity that has profits and can make distributions. And then you also have to pay yourself a salary. So your salary seems to get taxed at normal rates. But then there's this business entity that's separate. And so that's where there's this like tax favorability. But in order to run as an S Corp, you also need to do things like setting up payroll, which means going through like a payroll provider. I use QuickBooks for payroll. I think you do too, CJ.
Yeah, I do too.
But then there's things like you have to actually set up payroll tax accounts with federal government and state governments. You might need to set up like withholding for paid family and medical leave. And like there's actually a bunch of other accounts that you set up. Once you've set it up, I think QuickBooks can kind of manage things autonomously for the most part. But there's a bit of a hassle to set up the S Corp.
Yeah, I think that would be an understatement. And depending on what state you live in, because I was in Florida for a number of years, there's no state income tax. So all they care about is every year you pay them like $150. You say, I exist. You don't even need to tell them how much you made that year or anything else. It's literally sunbiz.com. Gotta love it. Also, whoever created that website in like 1994,
Sunbiz.
Hey, still the same website. Haven't changed it, but it works. And now in Connecticut, you go into this thing, you literally feel like you're trying to drive a spaceship, Kyle. This thing has so many tabs, so many modules, so many different types of taxes. So that was a real cluster to figure out.
Oh yeah, the Massachusetts one is crazy like that too. They've also done things that were odd. Like I wanted to set up the PFML and like unemployment assistance because I was told I needed to. But it was before my S corp was officially approved and I don't have any employees. And so I set it up, but then they rejected me because I didn't have any employees on payroll yet. And I was like, I'm just trying to get ahead of these things so I'm not out of compliance. Like, please just let me pay you.
Hey, thanks for listening. We'll be right back after a word from our sponsors. Ali and the team at Tabs are building something that directly addresses one of the biggest headaches I see finance teams deal with today. Pulling data from your ERP, your CRM, your FP&A tools, and your usage systems and actually making it all work together. If you're running usage-based pricing or complex contracts, you already know how this usually plays out. Contracts live in one system, usage data lives somewhere else, billing happens in another tool. RevRec gets layered on top at month end, and finance ends up just reconciling everything by hand to close the books. This is exactly the problem Tabs was built to solve. Tabs is an AI-native revenue platform built for controllers and CFOs. It brings together data from your ERP, CRM, and real product usage into a single system of record. From there, it automates billing, collections, and revenue recognition without finance having to duct tape workflows together every month. If usage-based revenue is core to your business, this is the future of how billing and RevRec get done. Go check them out at tabs.com/run. That's tabs.com/run.
When I looked to set up my first CRM at Growth Unhinged, I knew I wanted something that was actually AI first. The world has evolved. Most CRMs are still stuck in the 90s. I found Lightfield, the CRM that remembers everything and does the work for you. It joins all my sales calls, reads my emails, and has the full context on every account. At this point, Lightfield knows my deals better than I do. I haven't had to set up a single CRM dashboard. Instead, I simply ask Lightfield questions like, which deals in my pipeline are most likely to close, or who do I need to follow up with today? It even automatically prepares me for meetings with a personalized daily briefing, and setup was quick and surprisingly painless. Lightfield is my sales coach, RevOps analyst, therapist, EA, all in one. See Lightfield for yourself with a 14-day free trial. Connecting data from your inbox takes just 5 minutes, and you can migrate in under an hour. Go to lightfield.app, that's LIGHTFIELD.app, and use code MOSTLYGROWTH to get 3 months free. When I went all in on my newsletter, Growth Unhinged, last year, I quickly decided it was time to make the switch to beehiiv. I chose beehiiv because they're serious about powering the internet's best newsletters. beehiiv's all-in-one platform brings together newsletters, websites, and every tool you need to grow and earn. And they keep making it better. You can now launch, host, and monetize your podcast entirely on beehiiv. You can host webinars on beehiiv. And you can access beehiiv through the new MCP. I just use beehiiv's MCP in Claude Cowork to audit my site, prioritize SEO fixes, and analyze subscriber trends. It's my newest obsession. If you care about owning your audience, beehiiv is a no-brainer. Try beehiiv for free by going to beehiiv.com. That's BEEHIIV.com. Use Kyle30 for 30% off your first 3 months.
Yeah, it's a brutal process to pay. And speaking of that, when you're an S corp, what you should do if you're an LLC as well is make quarterly payments. Definitely more of a consideration when you're an S corp. But like, what's terrible about it is they're due by the 15th of the last month of the quarter. So we're recording this on 6/15. I have to make a big estimated tax payment today. But
CJ, we should say they're
what?
not due on the 15th every quarter, because today this is June 15th.
I don't have to make a payment today?
No, I'm saying so you do have to make a payment today. But if this were the end of the quarter, the payment would be July 15th. Like, it's not calendar. It's like the first quarter is 3 months, and then the second quarter is 2 months. The math doesn't make any sense here.
So what he said, and like 80% of our business, the payments are made like in the last 2 weeks of the month prior because it's all prepayments. And so I have to do this weird estimation thing and save up enough money which I've forgotten before, to pay these taxes ahead of when we get paid. So like, I'm pretty confident that our awesome sponsors are still going to pay me this week, but it just sucks to come out of pocket because for some reason the government doesn't want to use a normal business calendar.
So my accountant told me, and this is, I mean, obviously not tax advice for anyone, but if you did the estimated payments the year before, or like you filed taxes for your business the year before, instead of doing the precise calculation of exactly how much in estimated taxes you need the next quarter for like the next year, you can just basically take the last year's, and I think you have to
90%.
get to like at least the same amount. There's some sort of term for that, she was saying,
Safe
but
harbor.
yeah, that's what it was. So that might be a simpler way to do it going forward.
Yeah. So well, that's what I'm doing. I'm doing 90% of whatever it was last year. But I also, on top of that, have to say, well, I really hope we grow this year. So I need to keep a bunch of other money squirreled away to pay not only that delta of 10%, but whatever we went over by.
Well, that squirreling away, I'm doing that too, but at least you can like put that in some sort of account that's going to pay interest, which makes you feel like less bad about it. But so one of the things we should talk about though, is so when you are an S corp and you need to set up payroll, that means you actually need to figure out your salary for
Oh,
yourself.
yeah.
I don't want to ask you your salary. That's one thing. I guess you're not supposed to ask a man his salary, right? Isn't that one of the rules? But how did you decide how much to pay yourself?
It was like a total swag. And I asked my tax person, like, does this number feel high or low to you? He's like, that feels a little low. I'm like, how about this number? He's like, that's a little high. I'm like, what about this number? He's like, that one. I'm like, okay. So you don't really have a formula for this either. And the whole thing is just like total kabuki math because, like, if you think about a sole proprietorship business, Kyle, how could it exist if you weren't there? Like, should it be 100%? I don't know. Like, none of it makes any sense. It's like we're all in on this game with the government to just like make up a number that everyone feels is somewhat whatever reasonable means.
Yeah, it's so bizarre because it has to be high enough that like it is a real income that like you would pay someone with your experience. But then if it's too high, I don't know if there's a benefit to being an S corp and taking
Hmm.
distributions. Plus, you just are paying yourself a really high salary and you need to maintain your revenue for a business to like keep paying yourself that salary. So it's like a little bit risky if you overpay yourself. But yeah, that it is a really stressful decision. I probably got it wrong. We'll see. But yeah, so you have to decide how much to pay yourself. And then you actually have to run payroll, which another business blunder from my end. I thought I set up QuickBooks, but I didn't. I missed my payroll. I was checking my accounts and I was like, oh, I didn't get paid. So my very
You're like,
first
I got to
official
talk to the
payroll
manager
was
around here.
I
This
know.
sucks.
What happened? I always get paid. So I think there was like one button I hadn't clicked yet and you needed to click it within a certain time frame. So that was on
Do
me.
you think I should give myself an annual review? And if I did well this year, I should give myself like a merit increase?
I think you should have me do your annual review.
And then it'll go down and my taxable basis will go down. So I'll allow that to happen.
I guess if you are going to go the S Corp route, make sure to actually hit run when you run payroll. A little bird told me, like moving on from like
Yeah.
the business entity setup, a little bird told me that you had a blunder with Meta.
I'm a growth hacker. Did you know that?
Well, a former growth hacker. I don't know if the
I'm a
current
former, what's it called when you're a
a
lawyer and you get
recovering.
kicked out? Is that you get
Disbarred.
disbarred? Yeah, I got disbarred as a growth hacker.
You know, Meta is not known for being an exclusive club. You could probably go through all the Meta accounts that exist.
First of all, I don't want to be a part of a club that wants me as a member anyway. So screw them. I was toying around with, hey, like if I have excess cash flow, I wonder how much I could acquire a mostly metric subscriber for, because up to this point it's been all organic. So I'm like, hey, I'll throw like $1,000, $2,000 a month behind it to see what I can do. And it took me, first of all, forever to figure out how to set up a campaign. The only thing more confusing than the state of Connecticut's tax website module is Meta and setting up a campaign there and just like looking for the results. Like total nightmare. And I got it up and running. I was getting some subscribers and stuff. And then out of the blue one day, I just get this message saying that my account has been revoked. It's a final decision and I can't ask them to re-review it. And it's the most bizarre thing to me because there are ads for the craziest things on Meta, the craziest inappropriate things on Meta. And I'm doing like charts about valuation multiples.
Did they give you a reason?
They gave me zero reason. It did not give me a reason. It said I couldn't reapply. So like the whole thing, it felt like, and it also reminded me about platform risk in a lot of ways. Like it wasn't a great thing that I got kicked off from like it's good that my whole business isn't like a meta-based business, or we use YouTube and we love YouTube, but it's not our only avenue for distribution. And so I was like, holy shit, like getting turned off is horrible.
Yeah, that's pretty crazy. I mean, it reminds me, there were some sales tech companies that got kicked off LinkedIn for a while, where like the CEOs would be banned from LinkedIn and the company profile wouldn't exist. And so one thing that was funny at this conference I was at SaaS, there was a conference speaker named Nick, a company called HeyReach that does like LinkedIn automation, and they grew super fast out of the gate. And he was going through at the conference like the growth story. And it was very much like their LinkedIn playbook and how LinkedIn was super powerful for their growth. And then I went up and looked up his account. I was like, I can't find him on LinkedIn. This is weird because he's saying how much he grew. Turns out like the week before his talk, he got booted off LinkedIn for breaking the rules. And I was like, that's not a very good look. If you're a LinkedIn automation company and LinkedIn is banning you, that's probably not like creating a whole lot of confidence among your target customers.
Tough cottage industry to be in.
But it's just a tough thing with any kind of platform. I mean, LinkedIn has done this with like probably a dozen companies. The platforms have so much power and they have so little transparency. Like it's just very easy, I think, to break a lot of their rules. And then it's wild that they would have no kind of appeals process.
But it's been fun to experiment with some paid stuff. Ben's actually way better at growth hacking than I am. And he's been playing around on YouTube, just like, hey, for Run the Numbers, if we did $25 a day, $50 a day, how much could we get a subscriber for? And you start to gamify these systems and it becomes like this fun little side quest that you get to go on.
I mean, you're basically describing gambling. Okay, so if you're off Meta, are you advertising on YouTube? What are you trying to replace it with?
The last week I've been experimenting with Reddit. It's not been going great. I've been doing $25 a day. I created some ads to try to attract a very specific demographic, the accounting segment of the finance and accounting world, saying like, if you're a CPA who wants to figure out the road to CFO, do this. And like, what's cool about Claude or ChatGPT is it can actually walk you through extremely specific details how to set up these campaigns. Because before, like I would have been like a fish out of water trying to read like the FAQs and stuff. So I actually got a good LinkedIn campaign up and running. But like the returns, I think I've only got like 2 subscribers from it. So I'll give it another week and then I'll turn it off. But it's been like, as a CFO, these are not things that I would do. But as a small business owner now, I'm like, yeah, I'll dip my toe in the water. I'll try this out.
Yeah, so you're testing LinkedIn and Reddit right now as an alternative.
Not LinkedIn. We're doing YouTube for Run the Numbers, which Ben's been doing. And then for the newsletter, I've been trying out Reddit.
Yeah, we got some advice early on with the podcast that YouTube can be pretty efficient in terms of cost per viewer. The challenge I think that we were wondering about, and I'm curious if you have any learnings, Ben, was whether if you start paying for YouTube engagement, if that actually hurts your organic engagement. Have you found anything out about that?
Yeah, so far, I mean, we've had, CJ knows this, like the best numbers that we've had.
Best 2 months we've ever had.
Best 2 months we've ever had. So it definitely has not hurt our growth. We're primarily focusing on paying for the like grow your audience numbers. We tried it out with like, oh, let's just see how many views we can get on this one video. And it's like, it got views, but like, it's just number go up. Like that's all it really was. Whereas if you pay for the audience bit on YouTube, there's also this stat that's called follow-on views. And it's like in 30 days since seeing this, subscribe to this channel ad, did someone come and like then watch another piece of content? So it's like a way to sort of validate like, oh, like not only is the number going up, but it's like these are actual people that are then watching something else that is not the advertisement.
And that's our goal. We wanted to say, hey, could you acquire an annuity stream for $1? If you know what I mean. Like we didn't want a video to have empty views on it. We wanted to have people that came back. And so, and this is the fun part too of like being a small business owner. It can be frustrating at times, but like this is a part of my mind I never got to exercise. So it's me and Ben going through the funnel of like how you take someone from like seeing your ad to subscribing and then to coming back multiple times over and over again to rewatch it.
Yeah. Well, and if you see a channel work, it's also great because then you can just pour a lot more money into something and you're confident that the math is there. On my side, I've been doing beehiiv's boost feature. So that's basically paying other newsletter writers to basically advertise my newsletter. What I like about that is it's like $3 per acquisition, which to me is, I think, pretty reasonable. And it's acquiring people that already like and want to read newsletters and are like going to a newsletter on purpose to subscribe. Plus, you can pinpoint exactly who you boost with. So it's just relevant newsletters. So like topic wise, if someone likes another newsletter about marketing for tech startups, like they probably will like mine too. So it feels like a really good fit there.
There are other avenues for recommendations. One's called Refind and another one's called Spark Loop. I tried each of those for a week, but I found that like my audience is so hyper specific that I was getting no CFOs from it. So say I got 50, 100 subscribers at a low cost. It actually wasn't the type of person I wanted. So I turned those off. So to your point, if you can target the other publications that you work with, I think that's where it makes it much more worthwhile. Like we recommend each other. We have tangential audiences. The metrics in terms of retention and open rate are way stronger from that than where I would get from someone just off of Google.
One thing I've been thinking about testing is that for LinkedIn, they've been really big about trying to get you to boost your own posts, which feels weird. It's like, it feels like liking your own
dirty.
post.
Yeah.
I'm fine with other people boosting my posts, but boosting my own post feels really nerdy. That being said, they have a version of premium. So like I'm on LinkedIn Premium. If you do like LinkedIn Premium Plus, they bundle in like $50 a month in ad credits.
How can you have a Premium Plus model? Can you give them some pricing advice? That's ridiculous.
What's ridiculous about it?
It's like, this is the LinkedIn Super model. And then it's like, if you want the LinkedIn Super Duper model.
I hate to break it to you, CJ, but everyone's adding additional tiers. Got to get with the ball game. I mean, there's got to be a way to expand your best customers, right?
I gotta look what plan I'm on. So, sorry, I cut you off. You're saying you get 50
I think
credit?
you're probably just on LinkedIn regular premium. So if you do the top tier of premium, they bundle in like $50 a month in ad credits, which I think is actually smart because if you see that it's working, you'll just pour more money into advertising. So it's a good way to get people to start advertising on LinkedIn in a semi-subsidized way. But I'm debating doing that because I've got some posts that do really well from an organic perspective. So why not pour extra money into my best performing post that like are already doing well and I already know have a really high click-through and engagement rate? That feels like a smart use of money versus like a totally cold audience where I'm trying to find someone who's like no idea who I am and I'm trying to get them to subscribe to my newsletter.
I agree. And it's already showing that people organically enjoyed what you said. You're not completely force feeding it. You're just widening the aperture.
When we talk about like business blunders and for our own businesses, wasting money on marketing to me is like a business blunder that everyone goes through when starting your own business or like running any business. But mine is I had this boost through beehiiv that just seemed crazy good in terms of subscribers. I was getting like dozens of subscribers a day, and then like none of them opened the newsletter, and then somehow that company just decided to stop publishing a newsletter. So it tells me I was paying for a lot of spam. Thankfully, I didn't let that run for too long. Like, I mean, I probably wasted a few $100, but that's actually not too bad in the grand scheme of things.
Yeah, because what is it? A CMO knows that 50% of his budget is wrong and wasted. He just doesn't know which 50%. Like, I actually felt that for the first time this year.
Yeah, you're like, you need a CFO to tell you, be careful with that money. All right, so we talked about business entities, payroll, getting kicked off Meta. I've got another thing that I just feel like endless frustration about.
Okay.
This is insurance.
Ooh.
You actually ended up hooking me up. So I would say this is giving me, like, I did get this resolved. But before you did that, I tried to buy insurance and like I was too small for real insurance companies to want to serve me. Like I tried reaching out to legit places and they basically just didn't even respond to my outreach. Like I'm like, I want to pay you for insurance, please. And they're like, no, you're a single employee business. Absolutely not. And I did find a place, Byberg, which is like Berkshire Hathaway's insurance arm. They are known for more like of a self-serve model. You can buy insurance online. Like it's much more of a PLG play. But when I explained to them my model and having advertising through media, having subscriptions, having consulting clients, I think I like broke their brain. They
Yeah.
just like didn't know what insurance to sell me. And it was like way more complex than I could do online. So this like creator economy, like new monetization streams, like people don't know how to underwrite the risk to it.
The number of times I said NA to the cybersecurity risk questions, Kyle, I think I copied and pasted it 72 times.
Oh man. Yeah, there some of the forms. So you ended up hooking me up with a broker who can like take the complexity, get all the information they need, and then bid it out to a bunch of places. And
Yeah.
I think a lot of insurance companies only want to work with brokers. So it just like widens your pool and gives you someone legit, plus someone who can help you through the process. But yeah, their standard form, man, it was like 20 pages of stuff. I'm like, how am I supposed to fill out any of this?
Yeah. Do you think I'm like mining diamonds in the Congo? Like, how dangerous do you think this business is?
Yeah. The other thing that was weird to me is that all of it is like based on how much revenue you're expecting to take
Yes.
in. But then like if you estimate the revenue and you're like, oh, I think we're gonna make a lot of money this year, then you're just basically signing up for more money in taxes. But if you underestimate, you're like, you could be underinsured, which you don't want to do. So it's like that is a frustration, I think, with insurance.
You took the words right out of my mouth. I was like, hey, I think we can double in revenue. And then the insurance guy came back. He's like, that's great. I think your insurance premium can double in cost.
You're like, wait, no, never mind. I didn't mean that.
I'm like, no, but why? Like, what? So I'm being like penalized? He's like, well, it's going to go up like in a linear fashion. I'm like, this is a terrible business model. Okay, I guess I have to pay this too.
What's so weird is like, it can be the same risk profile. Like you can have the same number of ad partners that like the same whatever, you're just charging them more.
I just raised the prices. There's no incremental risk. It's the same look and feel as last year.
Gotta love it. Another one on my end that I should say I think is also common across businesses. I partnered with a pretty big company, like a publicly traded company, on just a small thing. And I did this last year. And it was a $10,000 invoice. Do you know the number of hoops they made me jump through in order to get paid for that invoice?
I bet you had to email them more than 10 times.
So the thread had 65 emails. I think it took more than 3 months. So I calculated 94 days from when we signed the agreement to when the money actually hit my bank account on a $10K invoice.
Question for you though. Were you working directly with them or were you working with an agency?
I was working with them. I actually think an agency might have been better because the agency could have handled the invoicing and payments versus the company themselves.
That's impossible. Agencies will always pay even later. So
that was going to be your pro tip.
Yeah. I mean, I think they are less price sensitive because they take a percentage of that. Like I'm just making it up. Say it was $10,000. They probably make $2,500. And if you charge them $20,000, they would make $5,000 off of it. So they're less price sensitive. And that pool of money, it's kind of like defense funding. Like it has to go because they want to get paid and that's what they were allotted and they have to put it towards its next best use case. But they will never pay you ahead of time like my other sponsors. And so you lose leverage once you start to run the ads. And then they also have payment terms that are like net 60 days after they get paid by the underlying company that you're doing the sponsorship for. So it truly has to be a price that's worth it for you in order to do it.
Yeah, I do not like that. Well, and what's tough is like most of my partners are like mid-sized companies or smaller companies, and they're like fine with standard payment terms. And like I invoice them via my bank, which is Mercury, or I guess they're not a bank, but close enough to a bank. But then, yeah, the bigger the partners that you work with, the more hoops you have to jump through. That's like really long legal agreements that are like 20 pages where you feel like you're signing your life away. Big insurance requirements, 60-day payment terms, submitting invoices through like Coupa or some other procurement platform. But what's so tricky is you often don't know what you're signing up for with these partners until after you kind of verbally agree on a deal. And then it's really hard to go back and be like, actually, I'm going to charge you like twice as much because of all of the hassle you're about to put me through. You can't like go back once you have that in place.
This is a logistical point, but it's such a flex when they take your agreement and put it into their DocuSign or Ironclad and send it back to you to sign. You just feel so small.
It's the statement of work on top of like a 20-page document.
Yes. Yeah. Yeah. That's happened to me too. It's like literally like a 20-page document. And it's like, here's your cute little statement of work. Doesn't really mean anything. We'll put it as an appendix.
Yeah. So my advice to my future self and or to anyone else, try to figure out what the logistics are ahead of time with these partners. And that might mean back channeling with other people. So you can usually find out who some of the people they're partnering with are. Just reach out. Like, hey, does this company pay you on time? Are they easy to work with? I've started to do that more and more with other creators, and people are pretty helpful.
Yeah. And always ask for payment ahead of time if you're running ads.
Oh, yeah. That's my current go-to is quarterly upfront payments.
Hell yeah.
You'd be surprised how many people are so gung-ho about advertising, but then are so blasé about the management of it. I think the payment side of it, for whatever reason, just like makes there more like, there's more of a commitment. There's more skin in the game. I think people actually end up being more engaged. And so that could be a self-selection thing. Like the partners that are open to upfront payments are just like more bought into this in general, or it could be because of the payment. But I find that it just actually helps have that commitment because the benefit they're going to see is not really just, it's not a passive partnership. Like it's really dependent on how much they participate.
What I learned as a small business owner dealing with marketing departments is the bigger the company gets, the more people who get involved in a deal, including procurement. And so even within like a single deal, you may have the person in marketing who agrees they have budget for it and they want to do this. Then it has to go to the finance and procurement side who are going to try to also add in their own like value add of like negotiating something that they may not have even have asked for. Like, oh, let's have an out at this many months or something, just like a call option on it.
Yeah, let's sign a year agreement, but with a 30-day opt-out where we can just opt out at any time with 30 days notice. And you're like, what's the point of the year agreement?
Yeah, like so it's not really an annual agreement. And then you have the person who owes you the copy, who's often not the person who committed the budget. So then you have to chase that person. So you just find that there are multiple heads to the snake.
One other thing on my side, I have to say, so both of us have multiple business lines with like advertising, subscriptions. I also have some consulting and speaking. On the newsletter subscription side, the tax stuff on that, I find endlessly annoying. And so some countries like Saudi Arabia or I believe the UK, they make you submit tax forms and like do taxes starting with a single transaction in those markets. I don't think I'll ever feel compliant doing newsletter subscriptions, but I'm also like, do I just want to like limit it to only US subscribers? That feels really strange. Do I want to like YOLO it with certain markets? Like that feels really uncomfortable. How do you handle that?
I've been YOLOing it so far, but I'm going to get on to TaxWire, who's going to help me with that.
What's that? What do they do?
So it's a software that is kind of like the next evolution of what Anrock started, but it's more accessible than like an Avalara. And they also handle international tax compliance as well. So like Stripe has some products for this, but like Stripe has a million products. This is specifically for those dealing with sales tax jurisdiction, both domestically and internationally. And they also help a lot of businesses that like aren't as straightforward. And so that's what attracted me.
Well, you'll have to let us know how it goes. I'm so glad you started your business like a year before I did, because I just learn all of your mistakes.
Yeah.
And then I kind of make them over again, but I at least can call you about them and complain.
And I can tell you, I told you so. We have had a couple fun complaining calls. I'm like, you feel better? Yeah. You feel better? Yeah.
I hope people didn't see this as like us just complaining for a long time. Like, I think the reality that I wanted to convey is like, I think, you know, we're successful. Like we're doing it. We're doing the thing. We're running our own business. It's like, it's amazing to have that flexibility. But there's so much that goes into it that no one really talks about. I think it's just like, it's way less fun to talk about the downsides. But I'm hoping this gives people more insight into what they're signing up for. And then also some like tools, like when you encounter this and what to do.
And net, I'm so glad I went out on my own. I feel like in many ways, I've escaped the maze that I was running for a lot of times. And it kind of looks like from the outside, maybe like I stepped off the track, but I just feel like I stepped onto another that gives me a lot of energy despite like all these tax hoops, you know, even though I don't love filing taxes on the Connecticut state website. Like for any sort of reward, I think there is going to be some sort of offset and administrative burden.
I agree. I mean, I'm not looking back. I'm not doing this and being like, I've got to get off that solopreneur route. I think I'm ultimately very happy with this. And I think for me, one thing that I've learned, like dealing with some of these struggles, is that like, at least when I solve it, like I know that I'm also the one that benefits from solving it. It's not like I have like a boss emailing me on a Sunday being like, I need this done immediately. And you're like, what the hell? Like, this is something that like, it's a frustration, but it's a frustration that like, if I can figure it out, like I directly benefit from that. And I can hopefully figure it out in a way that helps me not just once, but like every time I'm going to deal with this in the future. And so the number of these like mistakes that pop up or unknown unknowns, like they're hopefully going down each month as I learn how to do it.
Amen.
Mostly Growth is a Mostly Media production. Executive produced by Ben Hillman. That's me. Additional production by Steve Sarasoli. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of CJ, Kyle, and Ben. Just some guys who love talking growth. Mostly. If you like this podcast, hit subscribe and give us 5 stars. It'd only take like 2 seconds and our algorithm overlords love it. Drink water, call your mom, and have a great day.